What is going on, guys? My name is Richard and welcome back to another video. Today we're going to be taking an in-depth look into XP Inc., which is a new and promising growth IPO and is my stock of the week. In this video we'll talk about the fundamentals in Marketsmith, which is sponsoring this video. We'll also talk about the technical setup that I would use to trade the stock, and we'll also visit its website and talk about what makes XP so special. And in general, XP is in the financial services industry and is based in Brazil. And basically it hopes to become the Charles Schwab of that area. If you enjoy my analysis in this video, please go ahead and leave a like down below. It really does help me out and my channel. And if you're new and looking forward to more videos just like this one, go ahead and subscribe as well. It's completely free. Alright, so with all that said, let's go ahead and dive right into the analysis. And first things first, let's go over to XP's website and take a look around. And overall, if you go to this page right here, you can see that XP is actually composed of a bunch of different smaller companies, all of which are kind of focused on a different area of the financial services sector. And this one in particular, you can see InfoMoney is the largest site specialized in personal investments and financial education in Brazil. And I thought this was really cool. Of course, I'm the host of a financial education channel here on YouTube. So the more people who can become familiar with all of this, the better in my opinion. So I thought that was pretty cool. And if we go over to the investor relations tab, you can see that in this article right here, they've got kind of a summary of their company. And basically they say XP is a leading technology-driven financial services platform, is a trusted provider of low-fee financial products and services in Brazil. And their kind of core tenets are right here. They want to educate new classes of investors, democratize access to wider ranges of financial services, develop new financial products and technology applications to empower clients, and also provide high-quality customer service. So all good things, and overall, if you read through the rest of the news brief, this is actually about their Expert 2020, which is basically an event that they hold each year, and it basically allows people to learn more about the company, learn more about the services, and educate people about finances. And scrolling through, you can see that this actually contributed to a bunch of new accounts being added to the platform, which is very cool. You can see that there's a significant increase of accounts opened in recent weeks, a 10% growth compared to the monthly average in 2020, and you've got an 81% year-over-year increase in active clients. And to learn a little bit more about the company, I also went ahead and read this article from IBD, IPO Stock to Watch, Brazilian financial leader XP approaching new buy point. And scrolling through, you can see that XP is actually on the IPO leaders list, which is a positive, and they also kind of get into the story behind the stock. And especially if this is going to be more of a long-term hold, such as a position trade or even an investment, I think it's very important to understand the story behind a stock. And overall, XP is offering fixed income, equities, investment funds, and other pension funds to their clients, which are mostly middle-class investors. And before XP, these kind of investment opportunities were only available to the wealthy. So I think that's a great thing. Everybody should be able to invest their money, even if they have a little, a lot, or wherever they are on that spectrum. And they also talk about the acquisition of Flipper, which is an automated investment consolidation platform, which will basically just open up more opportunities for XP. And they also talk about how there is some expectation that EPS will be a bit lower this year, as we'll get into in Marketsmith, but analysts expect XP to return to profit growth in 2021 with a consensus estimate of 36% higher EPS. And to dive a little bit deeper into those numbers, let's head back to Marketsmith. And as always, I first like to look at the most recent earnings and sales reports. And looking at these numbers, you can see quite substantial growth, but you can see that this most recent quarter is much lower than these previous quarters. But earnings were still up 92%, sales were up 39%, and after-tax margins were up 23.9%, so it wasn't a bad quarter by any means. And looking at the annual EPS numbers, you can see what the article was talking about. In 2020, it's supposed to drop 35%, but it's supposed to recover in 2021, up 32%, and the revisions are up as well. The overall EPS rating is as strong as you can get, 99, that's very good. The Group RS is a B+, the SMA rating is an A, accumulation distribution is a B, and the overall composite rating is a very strong 98. And taking a look at the fund ownership, and this is very interesting, you can see it actually peaked in December 2019 and then dropped in March of 2020, but the trend is now back up with a recent increase in June of 2020. And you also don't have any high quality funds investing into XP. So this isn't the kind of ideal outlook that I like to see in terms of fund ownership, but I do like to see that the most recent quarter had an increase in funds. And looking at the chart, you can see that it's been kind of basing recently, kind of in this Darvish box between 50 and 41, just bouncing back and forth. And overall, looking at the RS line, it's also basing at this moment, although it is moving up recently, which is a good sign. And overall, the RS rating is a pretty strong 93. And an important thing to note is that the earnings is due in 13 days, so there's not that much time to build up a position and profit cushion in this stock. And going over to the weekly chart, it's always good to get some perspective. You can see that it's above its kind of IPO high price right here, so it is above its previous green line. As we'll see in TC2000, the up-down volume ratio is a nice 1.6 that suggests accumulation. The EPS growth rate is 74%. The PE ratio is 54, which is kind of high in terms of standard valuation methods, but this is in its growth phase, so I don't kind of see that as a negative. And overall, the return on equity is a very strong 23%. That's fantastic. And looking at the longer term history of the earnings and sales, you can see very strong growth here, and I hope that will continue. So that's kind of it for the fundamentals. So overall, a pretty strong performance in terms of those earnings and sales, but you don't have that key fund ownership that we like to see from those true market leaders. So with the fundamentals covered, let's go ahead over to TC2000 and talk about the chart pattern. And we are currently on a weekly chart to get some longer term perspective. You can see it moved up, had its IPO base right here, set its green line on this date right here in February of 2020 at 43.49, or it might have been on this date 43.52. So here it is. And then it had a nice consolidation pattern along with the market crash and has moved up strongly ever since. And right now it currently is taking a break, consolidating nicely for a few weeks, formed a downward trend line right here, right above its green line right here. And when we go over to a daily chart, you can see it actually broke through this downward trend line right here, had a short-term stochastic cross on this Monday, and has been moving well ever since with some nice upside reversals on these days. And overall, you can see volume coming in on this Monday, which is a positive, but you do want to see a definitive breakout on above average volume, something like these days right here, if it breaks out into new all-time highs. And overall, these key pivots are 49.78, so about 50, and also on this day, it also hit 50.63. So I want to see it continue to move up and have the nice breakout, and it could be waiting for its earnings report to definitively break out, but you could look for other entries such as a green line reclaim, a 21 retake, or a short-term stochastic cross. So in my view, it is actionable at this point if you look to buy right now. Obviously, you don't have that much time to build a position before earnings, and I don't suggest holding through earnings if you don't have at least a 10, 15, 20% cushion. There's just too much risk involved. But overall, taking a look at the moving averages, they're all moving in the right direction. You can see the 50-day moving average catching up with the price, and it's basing nicely right above this green line. I love to buy stocks in this position. You've also got CrowdStrike, which is another previous stock of the week, which is in a similar pattern to XP. So that's my analysis of XP, and I think it's definitely worth to have on your watch list because of those growth numbers and promising chart pattern. So I hope you guys enjoyed, and if you did, please go ahead and leave a like down below and subscribe if you're new to the channel, and I'll see you guys in future videos.